Hey guys, good morning, good morning. Guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on
Recording
US 30,
in
sell,
progress.
okay? I'm jumping in. Guys.
Hey everybody, welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Welcome everyone, good evening. It's 7 p.m. Eastern. It is Wednesday, September 18. It's post FOMC. Wow, guys. Okay, so there was some fireworks during FOMC at 2 p.m., 3 p.m. today, this afternoon. How is everyone doing? Did everyone do okay? We're probably gonna hear it. Maybe there was some snipers that blew up their account on some silly things today. Hopefully no one did that. Hopefully we are going to hear some positive stories today. I know that in our group, Dave did a live FOMC in the Zoom, and you guys did really well. So congratulations to you guys. So we got a lot for tonight. But we're going to keep it condensed. We're going to keep it 90 minutes. I got to wrap it up at 8:30. Got to get back into the gym. I'm meeting my buddy for my late night session. And so what we're going to do today's plan is we're going to go over the news. Obviously, we're going to just talk a little bit about post FOMC, what happened, where do we expect the markets to move tomorrow, Friday, and next week. So that's what we got to do. We got to look at the bigger picture, not just where it's going to move in the next hour. We want to get ourselves situated and positioned for maybe how September is going to close, early October, going into election, November, a lot of things. Okay. So last night we did DXY. Right here on my charts. I'll talk about that. We'll see how it's sitting on the 4 hours right now. So you can see a nice manipulation to the low, but where it closed back in that demand, and we created a new nice demand candle out of there. So I'm still bullish on the US dollar, and we're gonna see what this 50 basis point cut how it will impact the markets, and then we'll talk about gold. Okay, so remember, bias was to sell. I know the initial news was very bullish, but then it started to retrace. So we got to talk about that. Why was it initially bullish? And remember what we got to talk about: stop hunts, pending orders, liquidity, where the money is. If the money is sitting there, why not grab that money and go the opposite direction? This is what we talk about on a daily basis. We talk more about it on the lower time frames because some of us are scalpers here. But if you see it on the higher time frames as well, you can see how these things play out visually on the higher time frames. Like if you're staring at the DXY on my chart, you can see that big red bar we're going to talk about and how it took out. Look at below the big green box. What did it do down there, guys? You guys tell me. What was the reasoning? Why did they drop it down there? And then the next 4 hour candle opened bullish, ignited right in that green box and come all the way back up. So these are the things that we have to talk about. And guys, please learn this type of concepts that I talk about. This will elevate your trading to the next level, and then it might be your aha moment to start to say, okay, now I'm starting to understand price action. Now I'm starting to understand how markets are manipulated to get that money. Now I understand how they go after stop hunts and pending orders and stop loss raids and things like that. Then everything starts to make a little bit more sense. I know it still might be confusing for a lot of you guys, but that's why take your learning slowly. This is a process that might take years and years and years, even 10, 20, 30 years down the road. If you're still in this, you're still learning. You're still learning every single day. It's nonstop, guys. So That's why I love trading, because I'm learning every I'm learning every minute. I'm learning on every 5 minutes. I'm learning something new about the market. So it's, to me, it's fascinating. It's a skill that we have to learn together, without going to school, without the banks telling us what to do. This is something that we can learn together ourselves. That's why also I'm very attracted to trading, because it is a self-taught skill. Unless you want to pay big dollars and go into academies and pay 5,000, 10,000, $20,000 and go into those larger academies. I was part of one back 15 years ago at the Toronto School. For 1 week I paid $5,000 and I learned absolutely nothing about price action. It was just about fundamentals and how to read a balance sheet and financials and like earnings and things like that. Nothing that I was really into back then, but now I do look back and I appreciate what I learned there. But it was it was a lot of money. 5 Gs for 1 week. It was a lot. So before we get started, guys, how is everyone doing? Welcome everyone on Zoom. Thank you guys for joining. I appreciate all of you guys. Welcome. Good evening, Akon. Welcome, Josie. Good evening. Thanks guys for joining. I know you guys are really shy. You guys are really don't like to talk too much or chat. That's okay. I know you guys are quiet. I'm the chatty Cathy in the group. Welcome everyone on YouTube. Thank you guys for joining. Tony Gold, how are you, bro? Thank you for joining. POG, welcome. Thanks for joining. Mdu Jason, it's midnight in South Africa. It's a late night session for you guys as well. I know it's late for a lot of people. It's midnight, maybe 1 a.m., 2 a.m. for a lot of snipers. But it's okay. I like to learn at nights. I'm different like that. I like to do my learning, my charting, my analysis, my reviews in the evenings, late nights. I don't know. I've been like that since I was going to school. I think I retain more information later at night. But that's just how I am. Maybe you guys are different. Maybe you guys study in the daytime and things like that. Um, I'm more about practical in daytime, like a practical learning with the live markets in New York when the volume moving really nice. That's where I'm testing everything I've learned. That's where I'm trading and things like that. But learning, it's great. Tokyo session is fantastic to learn. It's a slower market. It's very technical. You can learn a lot. It's not as volatile as New York, because as a beginner, when you're learning, you don't want to learn in New York. It's too fast. It's too furious. It's pretty crazy. So this is the time where you want to be putting in some work and learning. And I know it sucks for some of you guys. It's late at night, but I'm not gonna. I know what it's like. I still do that. Late nights, midnights, 1 a.m., 2 a.m., 3 a.m. I'm still staring at the charts. I know exactly what you guys are going through. It's it's what can I say, guys? It's the real life of trading. You got to put in those hours around the clock if you really want to get this. So thanks, guys, for joining everyone on YouTube. I appreciate all of you guys. And and I got a little treat for us after, but we're gonna have it. We're gonna do a bonus session Monday night. Damon, who was on our YouTube last night, was talking about, Ron, can you kind of explain discipline, how to really learn discipline? And remember what I was telling you, it's more like self-taught and things like that. But then I said, how do you want me to break down discipline? I can break it down. I can have a 5-hour session last night. We can break it down into technical discipline, psychological discipline, emotional discipline, risk management discipline, fundamental discipline. So I made a quick little webinar that we're going to have Monday for everybody, same time, 7 p.m. For you guys on YouTube and Zoom. And it's going to be about technical discipline, and we're going to talk about it, and hopefully we'll learn a little bit. I'll show you guys on YouTube how kind of we do our webinars here, and I would love for you guys to join, okay? And shout outs to Damon for giving out that idea. I hope he joins tonight's call, because that webinar was basically dedicated to his question last night. So that's what I always ask you guys. Get engaged. Please, guys, ask questions. That's what we're here for. We're here to learn. I don't know what you guys know. I don't know what level you guys are at. Maybe some of you guys started trading today. Some of you guys have been in it for a couple of years. Some of you guys are old timers. And I don't know everyone's levels here. But if you get engaged and you talk to me, I can feed off of you guys. That's how I operate, guys. That's how I get more engaged, is if you guys are excited and you guys are into it. Okay. Um, Otherwise, I can just talk here and I can go off, but with you guys involved, it makes it better for everybody. Okay. So today was a big day. You guys know FOMC, 2 p.m. Eastern. First rate cut in over 4 years. Okay. Go back, remember COVID, lockdowns, and all that shit. You guys remember that, where we were wearing masks and all those things and whatever that madness was back then. This was the first rate cut in 4 years, and it wasn't that 1/4%. Papa Powell really pumped it half a percent. Okay, so what are the implications to the market? What is this going to do? Not just for today. Okay, remember, don't think just short term. Think long term. Think of a plan. Think of how this will play out. What will this do for your security that you're trading? Some of you guys are trading Forex. What will that do for your Forex pair? What will this do if you're trading commodities, if you're trading crude oil, if you're trading gold, if you're trading silver? What will that do? What will this do to the indices if you're trading S&P, if you're trading NASDAQ, US 30, Russell? What is that going to do? What is it going to do to those big, magnificent 7 securities we talked about last night? Well, the what ifs, the what ifs, the what ifs. But obviously, it's going to impact the markets for everything. But this is the beauty of trading and learning, is to follow the money, follow the candles, follow the wicks, follow the bodies. They leave a paper trail. That's what is called footprints. Okay, there's footprint charts. There's footprints. If you walk on the beach in the sand and you leave your footprints, I can follow your footprints and know exactly where you are. That's how the markets work. That's why they're called footprint charts, footprint candles. We can follow the money, follow the orders, follow the depth of market, follow the buyers, follow the sellers, figure out who is delta negative, who is positive, is there a pending short squeeze in the market coming, things like that. And we can break it down from the monthly to the weekly to the daily to the 4 hour to the hourly, 30-minute, 15-minute, 5-minute, 1 minute, and so on and so forth. You can break it down as far as you want. Okay. So number one, before we even get into a chart here, let's just go quickly to Forex Factory. We can bypass all of the London news. Okay. On a day like today, FOMC is everything. I know there's news in London. If you're trading London market and you're trading some currency, European currency out there, I know it matters to you, but the entire day consolidated. We'll see it on the hourly time frames, how it consolidated right till 2-3 p.m. Eastern. Okay, and we'll see how the markets. We'll talk about how the securities were moving leading into FOMC, and then how everything played out after FOMC. So before I start, did anybody get clapped today? Did anybody, like, I'm not saying this in a joking way, did anyone do something so stupid that you don't even want to talk about it? Did someone blow up an account? Be honest, guys. Let's all be honest. If I blew up an account today, I'd be straightforward and I'll tell you guys straight up. If I blew up an account, we were talking about, please nobody blow up an account. Blowing up an account is reckless trading. You're basically over leveraged with like one trade and you've lost everything. Remember, we're going to stop doing that. I even told you guys, sometimes don't even trade on FOMCs. Watch how everything plays out and react after the news. Like if you waited it out till power hour and you let 2 p.m. to 3 p.m. just go by, you could have found some good entries, some good trades. So you don't necessarily have to trade right away when they're dropping the news. This goes for the same for NFP. I know a lot of traders struggle with Friday NFP. It's released at 8:30. You don't necessarily have to trade right away when they drop the news. You can wait till Wall Street opens till 9:30. You can even sit out Wall Street and wait till 10 a.m. And sometimes all the volatility clears up. It leaves some structure behind. It leaves those footprints, and we follow the money, and we just continue to trade with proper risk management. And you might find that style suits you. It might suit your risk management. It might suit you to become more disciplined, what we were talking about. And then this might lead to success in the markets. Just some simple tweaks in the way how you approach your day in the markets. Okay. So welcome. Blaze, what's going on, bro? Cash Ebanks, welcome, bro. Trading Damaka, welcome. Comfort, thank you for joining. I appreciate all of you guys. Goodness of God, welcome all the way from Philippines. Thank you guys. Yeah, awesome. Okay, so what we got to talk about is right over here. Okay, so remember 5.5, we went over the history, okay? They've been just increasing for the past 4 years. We have not seen a decrease. So this is the first time. The market was kind of, analysts were predicting a 0.25%. See here, 5.25 was the forecast. And we were talking about a 0.25% or a 0.5% the entire last 2 weeks. Also last night's call, that's what we were talking about. But look at over here, we got now a 0.5%, okay, 50 basis points, from 5.5 down to 5%. This is pretty big decrease. Considering they haven't decreased in 4 years. So how did this affect the markets? And more importantly, how will this affect the markets going into tomorrow, Friday, next week, and October? How will this, because our next meeting is November. So how are they going to go about November? They're already forecasting maybe another 0.25% cut in November and maybe pause in December into the end of the year, or they're going to stay steady, with with a pause in November and then decide what they're going to do end of the year December. So already analysts are already talking and predicting shit, but we got to take it. We just got to understand what happened today before we can talk about November and December in 2025. Okay, so were you guys surprised? Number one, were you guys surprised at the decrease? Number one, don't worry if it was a 0.25% or 0.5%. Did anyone think that they were going to increase? Maybe that's the question. Did anyone think that they were going to hike this? How many people on today's call were expecting a hike? What that means is we would have seen a 0.25% increase, maybe to 5.75, or something dramatic like 0.5% increase to 6%. Remember what I was saying? We can't rule that out. We don't know what these guys are going to do, but we have to react accordingly. That was a possible option, and I know a lot of traders and investors were thinking that they were going to have a huge head fake, and because the market already baked in these cuts. Imagine that. Like, how Papa Powell, if he wanted to really pull a heavy one, where it was, analysts were saying 99.9% cut, and then he says, nope, we're hiking it. Oh shit, how would that have reacted in the markets? That would have been something dramatic and exciting to see. However, we never had that. We had a cut, and was it a 0.25% or 0.5%? It was the 0.5%. So how will the market now take this in? So things are still early. We'll see how markets react tomorrow and Friday, and then see how things are shaping up for next week. But we can already see on the 4 hours something is developing. Okay. So let's take a look now. So you guys are all clear with what this means. Federal funds rate. That means, okay, so we talked about this last night. Interest rates are coming down 0.5 basis point. That's quite a bit. Okay, so they're dropping them for the first time in the last 4 years in US. So we talked about this. What will this mean? Like we were saying, if you drop interest rates, that may create a demand for the US dollar. Why? Because more investors, more individuals like ourselves, we might now go to the bank and maybe get a loan, maybe a line of credit, maybe a mortgage or something like that. We can borrow money now at a reduced interest rate. It's still pretty high, but it's 0.5% lower than what it was. So maybe some people are now going to borrow a little bit of money, and that will start to increase demand for the US dollar. So we should see maybe the US dollar show some strength in the near future. And also, this may create some printing. US right now is in trillions of dollars of debt. So if they see demand for the dollar, and they don't have the dollar right now, they're in debt, they got to start that printer again. Like, I got to be quiet. I got to whisper this. I can't say it too loud because YouTube might shut me down. So I'm just playing. But they might turn the printer on. So what does that mean? That means that they're going to print more money, inject it into the system. And what have they been telling us this entire time? We're going to lower inflation. We're going to lower inflation. Inflation is coming down. All this transitory, all this BS talk about inflation, this and that. Well, when you create more supply, when you create more money out of thin air and it's injected in the markets, that's going to cause people to spend more, and it's gonna do everything opposite. It's gonna increase prices again. So we're not doing anything. We're not eliminating anything. We're just creating more inflation, and we're printing more money. That devalues your purchasing power for the dollar. But that's long term. So we'll see how this plays out in the next few months. But let's see now the charts, how everything plays out. So just before I get to the charts, tomorrow, guys, just get ready for tomorrow. So tomorrow we've got live London with Shahab over here. Pre-London, there is some news. 4 a.m. You got news, but more importantly, there is the 3 UK red folders. Make note of the time, 7 a.m. Eastern. So you can see it's 4 hours later than the London market open. So at 7 a.m. Eastern, you're going to have 3 back-to-back red UK folders. So if you're trading the pound or you're trading the euro or any type of currency, please be careful here, because you have the 3 folders, and it's kind of like the interest rates, the official bank rate, what happened with the US today. So you got monetary policy summary, you have the MPC official bank rate votes, and then you have the official bank rate. So you can see that they're forecasting no change, but we'll see maybe what happened with the US, what they will do now. Okay, so their previous was 5%, their forecast was 5% for no change. So we'll see actual, if it's a no change here, if it's a hike, 0.25%, or more I'm leaning towards maybe more of a decrease over here. We might see a 0.25 percentage point to 4.75, or we might see something dramatic like a 0.5 percentage point, like FOMC today. Okay, we may see that over here. And then continue to move over here. We go into 8:30. Our unemployment claims, that are our weekly unemployment claims that come out every single Thursday morning at 8:30 a.m. We're seeing a previous 230,000 and a forecast of 230,000. No change. So we'll see the actual numbers here. Remember, these are weekly. These play out every single week. So it's not like the NFP once a month. These ones are weekly, okay? And then you got your Philly Fed manufacturing. We move into Wall Street tomorrow morning, and then 10 a.m. you got some existing home sales, some natural gas storage, and then kind of wraps up the afternoon and the day. And then Friday this week, okay, it's a little lighter over here news-wise, but you do have some European news, London, more specifically in North American. You got some Canadian news again over here. So you got retail sales, core retail sales, and then Bank of Canada. McLean is speaking over here. And we have our consumer confidence report in Europe at 10 a.m. And you got some speakers in the mid-afternoon. And then that's Friday, guys. So please play it safe on Fridays. Trade with proper risk management. Don't do anything silly on Fridays. Control your risk management. Please have good discipline when you are trading Fridays, okay? No one's saying you don't have to trade. Absolutely, you can trade. Fridays are, for some traders, are the best days to trade, but just go about it responsibly. Don't do anything crazy just because you know it's the weekend and you're going to go full port and you're going to risk your entire weekly profits on just because it's Friday, because you want to go into the weekend and you want to party and you want to be a rock star on the weekend. You're probably not a good idea, okay? You want to trade real cautious and business savvy on Friday, guys, okay? So that's our news this week. Earnings, we talked about it yesterday, really light this week. We had our General Mills. Remember, we were talking about Fruit Loops. I actually, after the call, I had some Fruit Loops. They were delicious, and maybe after today's call, I'm going to go back to those Fruit Loops. So General Mills over here, they're a cereal brand. They reported this morning. They beat estimates. You see, we're buying a lot of Fruit Loops. They made $4.85 billion, all those Fruit Loops that we're eating over here. So they're making some money. You can trade this corporation through equities or through options if you like, but pretty good results. What do we have after hours? Not much going on. Tomorrow morning, what's going on? Again, Darden Restaurants, Cracker Barrel over here, Endeva. I just scroll through these. I look for the big names. I look for something that I'm interested in trading, as you guys should be too. If none of these things really matter to you, just keep moving on. Don't complicate things. Let's go into Thursday after hours. FedEx. Okay, FedEx Corporation is a big corporation. They're in charge of all the deliveries. They're very, very busy and big corporation, and they report tomorrow in the after hours at 4:05. You can see the earnings and the revenue. You can take a look at the individual security if you like. Or you can just keep an eye on this. Will it impact the markets? Maybe a little bit, maybe Dow Jones and things like that. But some people are interested in just trading these individual securities. Some people work for FedEx. You can trade your own company, guys. No one knows more than you because you're like an insider. You work for the company. Absolutely trade it. If you know anything, it's all good. Share some information with us if you know something. Over here, Friday morning. Not too much going on. Light Friday and after hours, absolutely nothing going on. Okay. Yahoo Finance. Okay, so use this for news, guys. Just get some daily news. Fed goes big. Man, Papa Powell with his purple tie, he went big here. Slashes interest rates by half a point. Said the cut was a sign of our commitment not to get behind as the jobs market cools. A lot of analysts are saying, well, why didn't they cut in July when they were looking at the job markets? Why did they wait so long until September to cut? So who knows what's going through this man's head right now, his decisions and things like that. He's very powerful, this guy right here. But we'll see what happens. Okay, so if you want to read any articles related to this, you want to further educate yourself, there's lots of articles you can read related stories. Get off the Netflix and start to educate yourself with some good stuff that can help you make some money in the markets. There's a lot of things going on here. 30-year mortgage rate falls to the lowest level since 2022. That's interesting. That might be a good read right there. UAW members at Ford's River Rouge tool and die unit set strike deadline. So if you're like right away, right there, Ford and GM and Chrysler, Stellantis, those are the auto manufacturers in the US. Right now, when you see something like this, read this article. It just came out 13 minutes ago. Get right on the Ford charts. See what's going on with Ford. Maybe you might look for maybe a put position. Maybe just read and look at the charts and see what's going on and put the pieces of the puzzle together. It's beautiful when you guys can do it and it plays out and you're like, oh shit, I knew that this was coming. I read the article, I looked at the charts, I planned it, I made a good solid plan, everything developed, I took a trade and I made some money at the end of the day. And I'm like, can we do this again? Can we do this again? Look at all the news. There's so much here that's non-stop. That's why the stock and option market is ridiculous. Like if you think Forex and futures are big, you guys don't even know what goes on over here. So this is a whole nother world for a lot of you guys, and I can't wait to really get into this stuff. Overall markets over here, you can see what's going on with S&P, Dow, crude, gold. The movers that I'm looking at, okay, Nvidia was down 2% today. It's back down to 113. It might be consolidating, might come back down, maybe bounce to those all-time highs, but who knows what the markets are going to do now, okay, after the news today. And Discord, guys. Okay, so real quick before we continue, this right here, gold. Remember the sell idea that we were kind of talking about on the higher time frames? So right over here on the 5 minutes, you see the big bullish move, FOMC, all that bullish volume come up to, tapping into 2600. We'll talk about that on our higher time frame chart. Remember what we were talking about, that psychological level for transactions, 2600. It's a beautiful number, a nice all-time high. Come up there, take all those pending orders up there, and then boom, they slam it down. So we kind of were looking for sells below 2597, 2598, just a hair below 2600. You got your first bar that closed below, you got your confirmation, and it starts to push down. It starts to come back up below like 50% of this bar, continuing. Then it takes out this critical level that was building all day throughout Wall Street and closed below 2568, kept dropping all the way down to 2550. So that's a big move, guys. 500 pip piece. That is the craziest move of the year so far. So and shout outs to Dave for stepping in for that live FOMC, and I know you guys had a great time, so shout outs to Dave for hosting that. And also some indices over here, guys. Again, look at the levels. Okay, this is this is NASDAQ on the 10 minutes. So looking for levels to break. It came down, still respecting this structure over here. We pulled nice V bottom recovery, and then the bar comes back and closes above where we're looking for the buys, 19,434 area. And you got your bar that's respected, close with volume above for some initial confirmation, and then when you learn, then it opened ignited. There was no pullback, shorter wick. Maybe you bought in here, place your stop loss a little bit. It depends what your risk is. Maybe 50% of this body below there, but the general idea is below structure here, and it pushed all the way back up. And then look at the nasty candle. What it does, it came red, right down exactly to 19,434. Right there. Take out break evens, take out all the pending orders, take out stops, grab that liquidity down there and bounce right off, and then continue to explode all the way up there. So once you learn critical levels, we talked about it, point of control, we were talking about it yesterday. Keep learning, guys, keep perfecting the skills, and over time it's going to make more and more sense, where you're going to be able to do this with your eyes closed very soon. Okay, but we will continue to teach you guys. So, but I need you guys to ask me questions. Otherwise, I don't know what you guys know. I don't know where you guys are. So I'm assuming that listening here every single day, you guys understand what I'm talking about. If you don't know, that's why I encourage you to ask, because if you fall behind, then it might get confusing, and we don't want to set you guys back. Okay. So our live Zoom with Dave over here, fantastic sell setup into the red supply box and the drop, beautiful. These are some of the members over here, right over here, weekly goal hit. Thanks, Dave, for gold sell, amazing. Hitting weekly goals, that's unbelievable. On a Wednesday, hitting weekly goals, you can take now Thursday and Friday off. But good feedback from everybody. Good job, guys, on Zoom. Congratulations to everybody. This is what I was just talking about, guys. Everyone on YouTube, if you want to join for a free blog, visit our website, stocksnipertrading.com. Go over here to more blog and sign up here. And these are all free, like daily blogs we give. This is what I was talking about the other day about the point of control. This diagram maybe made sense to some of you guys. And then you can see where the volume gets a little bit heavier. High volume accumulated here, then they redistribute it on low volume markdown, and then again, this is where it accumulates for again the low markdown, and then it comes right back up, green to your initial box over here, and then when you stretch it into the future and you make it the appropriate color, if the volume is below, you make it red. If the volume is above, you make it green. And you see the pullback came right into the zone, and then they reject it and continue to push it right back down, continuing with that lower low, lower high trend. This is the drop base drop rally. So if you guys are starting to, if this is starting to make more and more sense, then this is where you can take it even further and learn more about about volume nodes and take it even further and learn more and more and more about structure and why, then ask yourself, why does the market do this? I know some of you guys kind of just memorize patterns and that's what you do. If that's how you trade that and it works, but take it, I encourage you to take it a little further and understand what's going on behind the scenes here. Why does the market do this? Why? Understand the psychology, why it does this. And then you're going to start to get a better understanding of the markets as a whole and start to, predict these moves on a daily basis with confidence. Okay. And then this is, so I don't think we have Damon on the call on YouTube, but this is what we're going to go over on Monday. Join us, guys, Monday, 7 p.m. Eastern. We're going to have a webinar, weekly webinar with YouTube and Zoom. Okay. So this is what we're going to talk about. It's this over here. It's the technical discipline in trading. Sorry for the fonts are so big here. SST, Super Systems Theory of Trading. So this is the entire thing, the systems that I'm creating for all of you guys. So we talked about this technical discipline in trading. It was mentioned last night on the call. So we're going to talk about following a trading plan. I know some of you guys are lost on trading plans, but that's why this will be important. We'll talk all about it. We'll talk about risk management, emotional control, consistency, adaptability. We'll start to break those down, and then we'll get into why a trading plan is important, and then I'll talk about trading goals, market selection, trading strategies, risk management, trading routine, performance review, trading psychology, and adaptability. And we'll talk all about those things as a group, and hopefully you guys will learn something from that. Okay, so that will be Monday night, guys. This Monday coming up at 7 p.m. Eastern will be a webinar. Okay, now let's get into the charts. Sorry guys, if you can hear my daughter, can you guys hear my daughter yelling upstairs? I'm going to have to tell her to keep it down. She's excited. Not sure what's going on up there. Maybe she's excited about FOMC. She heard that Powell decreased the rates by 0.5%, and she's telling all her grade 3 friends right now. I have no idea. Maybe her friends are learning about FOMC now, and they're super excited to learn about this. Okay, guys. Okay, so we got to talk about the U.S. dollar. Okay, we got to talk about the big dog. The big dog is the U.S. dollar. Okay, every day, you should maybe take 3 minutes before you even get into add this. Okay, right now. Add DXY into your daily routine. Add it into your, when you get up in the morning and you have your coffee and you have your bagel and you get ready and you get to the computer and you start it up and you go through your daily routine. Make sure you add DXY to your daily routine. Whether you trade it or not, I don't care. But just add it to your routine, because once you understand how the US dollar is moving overall to the other major currencies of the world, maybe then you can start to understand why the US dollar is strengthening. Maybe you can understand why it sold off recently and things like that, and start to put the pieces of the puzzle together. But this is a big piece of the puzzle. Okay, so make sure you do something with DXY. Okay, V, what's going on with the Leafs right now? I'm kind of just lost with the Dallas Cowboys right now, that I can't even get into hockey right now. But are they making trades? Okay, so the US right here, DXY, this is 4 hour. Okay, remember, we're in Tokyo. We're talking about swing trading, not kind of like 5-minute scalping. We're talking about the bigger moves. So if you joined us for last night's call, and I can encourage you guys to join us, because then I don't need to keep going over what we talked about the other day, what we talked about the previous day, and I want to go further and more advanced, but I need you guys to join the call so you guys understand what I'm talking about, so it doesn't become repetitive. These bigger zones were marked up from the daily. We went from daily brought it down to the 4-hour. And then you guys know that this yellow line came from a point of control on the daily, and I have other zones on my chart, point of controls. Okay, so you can see in the past back here, early September, the US dollar sold off right down into here, 100.60, and it got rejected out of there. So it showed that there was some nice demand waiting here that got activated. So it kind of showed us that this was an initial area of strength, and then they brought it right back up. But you see, it's not breaking this just below 102. It's not breaking this 101.80 level. Every time it gets up here, it sells back down. Every time it gets back here, it sells back down. Every time it gets back up here, they sell it back down. Okay, so you can understand that next time if it comes back up here, it's probably going to sell back down unless we get some green volume close above here so that we can flip the zone. It's like thinking that we're flipping the order book. We're flipping the depth of market. This zone of supply, if we get green body close above here, then we could be making this into a new demand zone in the near future, okay, with some possible retests and holding and some confirmation candles. But by the time we get up there, we have this level we have to get above, and we still have this point of control. We tapped into it today, but did any 4-hour volume close above there? That's what we got to talk about. So you can see how it was kind of, now let's break it down from Tuesday. Remember, Tuesday, if you were trading Tuesday, you're leading into Wednesday's FOMC at 2 p.m. So look at how it's kind of just trading. It comes down red, comes back up green a little bit, goes back down red a little bit. This is Wednesday. This is like London. Then it comes back up green during the New York session. Then we start to make our way down, and then they drop the news. Came all the way down there. We'll talk about that. And then look at the recovery at power hour. A new 4-hour candle close opens. For some of you guys, it might be 2 p.m. with some of your broker securities, maybe some 3 p.m. This can be all depending on what broker you're looking at. Okay, but just in general, with whatever security you're trading, make sure you understand your charts and make sure you understand when the higher time frame candles are opening. I don't know, again, what broker you're trading with, so I have no idea. But for the most part, this is part of your routine. Get to know your security as if it is your girlfriend, if it's your boyfriend, if it's your spouse. Get to know the personality. Make sure you know at this time every single day a new 4-hour candle is opening, and this has got to be a routine, guys. This, you can't. I don't know how to say it, but this has to become automatic in your trading. You'll appreciate it, and you'll thank me later once you understand what I'm talking about. Because then you'll know every single day, okay, if it's 2 p.m., 3 p.m. this day, even if you're not at the charts, a new 4-hour candle is opening, maybe just glance at it for a couple minutes and say, okay, I see where it opened. It's an ignited bar. Okay, I see how far down it came. I see the low wick, this and that, and then it might help you when you get back into the markets and understanding how that previous 4-hour candle opened. There's a lot of context in the 4-hour candles. As you go up the higher time frame chain, it's higher time frame holds more weight because it's been tried, tested for a long time. That's why there's a lot of fake outs when you're scalping the markets on the 5-minute candles, on the 1 minutes, 3 minutes. There's so much going on because there's not too much structure built into that. So that's why if you're scalping, you got to have that pip and dip mentality. You got to get in and get out because there's no real structure that's accumulated unless you go up. You go up to 5 minutes, you go up to 15, you go up to 30, you check the 1-hour structure. Then you can see how things are starting to develop. Okay, that's why we do a top-down analysis, and that's why I stress how important it is to always do a top-down analysis. Okay, guys. Everyone on YouTube, thanks guys for joining. If you guys wouldn't mind, if you guys can hit the like button, just so we can maybe tap into anyone that wants to learn about trading during this shitty time, like this late night sessions. Let's try and get some more traders in here, guys. Let's if you guys don't mind hitting the like, maybe that will make the algorithm a little bit bullish and get some new traders in here that want to learn, because I love when there's more people engaged and want to learn. Okay. Now, remember what we were talking about. Fake outs liquidity grabs, and things like that. So before I'm going to go down to the 1 hour so that we can make sense of this. Okay, so now I'm on the 60-minute candles. So what we can do now is we can start to understand how the hourly candles were building leading into FOMC. And then I want to talk you guys through. I know it's already happened, so it's essentially we're kind of back testing, but we should be doing this. You should be back testing and learning and learning and learning, so that when the markets are live, if you see these type of patterns, you know what to expect. There's nothing wrong with back testing, guys. I see a lot of traders these days don't backtest. I used to do this shit. I used to love doing it. I still love this. I used to spend 3, 4, 5 hours on a Friday night, on a Saturday night. I know I'm a nerd and I know I'm not going out partying like when I was younger and things like that. But as you get older, you're not into partying anymore. Well, I can say for myself, I'm more into staring at the charts and looking and learning so that I can maybe make some money next week. And that's what I'm interested in. So pick your time when you're actually want to learn, like for some of us it's late at night, for some of you guys it's early morning. I don't know. For me, I like to smoke weed and learn. So if you guys got anything, please puff and pass it to me, and I'll do the same to you guys, as long as it's legal in your country. Okay, if not, visit Canada and it's legal over here. We can puff pass, and we can learn about candles together and price action. So what happened leading in? Here's Wednesday, 9 a.m. Okay, let's go back here. Let's go back even further. Let's talk about London. Okay, so there's a London market, 2 a.m. Okay, they drop it down, 3 a.m., 4 a.m. Okay, so we start to move down. They come down. Did anybody mark? You see this big green candle that filled the imbalance right here? Okay, see this one on Tuesday at 8 a.m. Remember, 8 a.m. is an important time in the markets. We have red folder news. We've got COMEX market open. There's a lot of juicy stuff happening at 8 a.m. Eastern every single day on an hourly candle. Anybody in the group cut this bar in half? Please be honest. If you ask me, I'm always cutting bars in half on all time frames. But when you see an unusually large candle like this one, from the bottom to the top, it filled this entire zone. Please, guys, if you can get in the habit, go over here to this horizontal line, pick and just click it, and just right there, cut it in half. And make it whatever color you desire, okay? If you want to make it yellow, green, pink, purple, that's your choice, okay? But just have a line here for reference, okay? Let me know, thumbs up, if you guys understood what I did right there, because this could be very beneficial to you down the road if you understand just what I did right there. I know it's really, really simple, but this can take your trading to the next level tomorrow, right away, if you just do this and get in the habit of doing this on all time frames. Someone might say, Ron, well, do you do this just on the hourly? Do you do this just on the 5 minutes? Do you do this just on the 1 minute? Do you do this just on the daily? All time frames, whatever time frame you trade on, make sure you're doing this, even with a top-down analysis. That's why I kind of color code it. Okay, again, no one is engaged, no one is saying anything about this. So I'm gonna assume that you guys know what I'm talking about, or I have no idea. But I'm just gonna continue doing what I do and just assume that you guys know this, and we can go forward. Okay, so all I did was cut it in half. Why? The question is, why do you cut it in half? Because it gives me the psychological zone. The golden zone. If you use a Fibonacci retracement and you cut it in half, you'll get kind of that golden zone, that 618 area. But that's where the point of control is. Remember what we talked about, this free blog over here? The point of control, okay? 50, look at this move, okay? From the top up here to the bottom, is this not cutting it in half right here? Okay, if I just put a Fibonacci from the top to the bottom, it's going to tell me like right around this area is the halfway point. Okay, so that's the meat in the hamburger right there. You got your buns on top, you got your top bun, there's your bottom bun, you got your lettuce, your tomatoes and pickles and all that shit inside here. But the meat Where's the meat? If you're a vegetarian, I'm sorry. If you're a vegetarian, then load up on lettuce in here. Put a big stack. Put a whole head of lettuce. Okay, that's going to be your meat on your burger. If you're vegetarian, I'm not vegetarian. I like my hamburgers big prime rib, juicy burgers. So this is the meat. If you eat meat. If you're a vegetarian, I'm not here to offend, but you think about big lettuce right here, okay? And this is your point of control, okay? So when you establish it, look at how the market rotates right back up to the meat of the hamburger, and then boom, that juicy, the juicy trade to go back down. And look at the point of control. You can see that the volume starts to get a little heavier in here. So then when we're looking at the charts, okay, on the 1H, sorry. Okay, so you see what I mean there? Why I always look at the 50%? Does that make sense, guys? Yes, no, maybe so, no idea. Oh my God, it's 7:50. Okay, I said that we got to get this done by 8:30. Oh shit, this is I'm not good with time management. You know what I'm trying to teach you guys with discipline and trading and management? I'm horrible in time management. If anyone can teach me and help me become better with time management, please help a brother out. I'm ridiculous, like horrible with this. I don't know how to do this. But anyways. I get so excited with what we're talking about. Okay, so number one, 50%. This has nothing to do with today's call. I'm just trying to explain to you this candle bar. If you notice something like this, right away your eye should be gravitated at half. Okay, we pushed up. There was some volume that closed above. We retested it and pushed up. Then they gap it down, and then look, there's the red bar pushing down. Look at where it comes down to, right into the meat of that hamburger, right there. That 50%, that white line, look at it, it taps it exactly to the white line, right in the meat. And then what happens? It goes right back up. Okay, bounces off of there, no volume close below in order to push it down here. The buyers were waiting there, pending at 50% at the meat, at the point of control of this big hourly move that started this uptrend. And there it is, and it pushed back up. But no volume started to close above the highs. So that's essentially a lower high, push back down. Look at where it retapped again, that white line holding 50% right there, that meat of that big body candle. And it continued to push back up, but then they look at now. Now we're going into FOMC and what happened. So noon, they start to bring it down. We have an inside bar at 1 p.m., okay? An inside bar is neutral, 50-50 consolidation. Why? Because the buyers have no idea what's going on. The sellers have no idea what's going on because we got to hear the news. So here is 2 p.m. Here's when they just tell you we dropped half a basis point. What happened? It's an ignited red candle, okay? Remember when we talked about this last night? We said if they cut the rates, would it not maybe make strength for the US dollar? That was our conversation we had last night. And then everyone's going to say, well, Ron, why did it go down red right away? Why didn't it just go up green? Okay, so this is now where we got to take learning about trading to the next level. You got to understand why they came down here. Why? What was the reasoning? Okay, remember this big green zone? This was that daily demand. So look at what they needed. They needed FOMC, okay? They needed a big red folder. They needed a big news announcement in order to go down red, red, red. And look, right at that white line, did it stop there? No, it kept breaking down. We break these bodies right over here that were hourly structure support from Tuesday at 5 a.m. Eastern, and it broke it. And look at how low we went down to. Like, I'm going to place a white line to show us where it went down to. And then we'll also break this how fast it went down as well, because I know we see an hourly candle, but this could have been in like maybe 15 minutes. I don't know. We'll break it down even further. But you see the low. Where did it come down to? 100.20. Okay. Remember, what is that nice psychological area that where transactions like to occur? 100. That nice psychological area. So what happened here? It came all the way down, okay? It was initially bearish, and then it came right back up. And then look at power hour. The next hourly candle was this big bullish candle that broke a new high, broke right through that daily point of control, this yellow line. And since then, we haven't really had any green volume close above yet. We retraced right back down. So what I would do is now analyze how we're going to move into tomorrow. Like, remember, I'm still bullish on the US dollar. I'm still bearish on gold. I'm still bearish on shorting the pound dollar. I'm still bullish on the indices, on the markets going for new all-time highs and things like that. So, but how long will it take to play out? We got to figure out where volume closes above key levels. Now, does anyone want to explain to me what happened down here? This play right here. What happened? Can someone please tell me what happened here in kind of like sniper terms, what we talk about? I'm going to assume then if you guys all know what happened down here, then I don't need to talk. We can wrap up the call and we can all say good night to each other and we can come back tomorrow night. Unless you guys want to know what happened down there. Okay, Zenetta, liquidity grab. Amir, liquidity grab. Phil, liquidity grab. Noor, liquidity grab. Yeah, hell yeah. What else do you want me to say? Liquidity sweep. There's a nice word. Look at comfort. I like it. Sweep, okay? Grab, sweep, mop the floor, vacuum, whatever we want to call it. Okay, remember those are those names. We can call it anything. You guys got the names correct, okay? But let's now understand the context behind the name. What exactly is happening here is what is down here? Tell me what's down here. Okay, you know what's down here? Anyone know what's down here? What are these? What are these? What are these, guys? I know there's red. Okay, someone want to be a smartass and say they're red lines. Okay. I know they're red lines. Okay, but these are if you're a buyer, right? These could be stop losses. If you are buying, you know, whenever you take a trade, you buy, and there's stops you place your stop naturally below structure. But these could also be pending buy orders as well. You know, we can change the color to green. Okay, stops are red. These could also be, again, guys, I apologize for the lines are not perfect. I'm just trying to make a point here. They could be pending buys, right? Do you guys understand that? That these can be pending sells for sellers when it comes down here, okay? They sell because they think it's going to drop even further, so they want to get in on a sell. But could be buyers here waiting, pending to buy this low move and buy this position. There's also stop losses here. So pending orders can consist of anything. But what I call this entire area is liquidity. This is liquidity waiting to get tapped in the market. We can also visually show it like this. What about this? Are you guys I know are familiar with this emoji? Is it an emoji? I don't know what to call these things. Not so what is that, guys? Anybody know what that is? That's money, okay? That's money pending. Look at, when was the last time it came below this green box? Look, on the 1 hour, I can stretch this into the past. Look at, keep going. Look at the top of that wick was, when was this? December, guys, look at the date. Thursday, December 28, 4 a.m. Eastern, okay? I know okay, so this is Santa Claus. This is if you celebrate Christmas, okay, right here. Going into the new year. The US dollar dropped right there, 100.617. We could even go with a 618 and be accurate with the 618 zone. Right there, perfect. bounce. Okay, so we have not came down here since December 28, 2023. That's a long time. Okay, so you better believe that there's some money down here. So we talked about manipulation. That's another fancy word. The market can go wherever it wants, whenever it wants. That's why they're called market makers. They make this entire market. It's kind of their game, and we're playing their game with them. If we understand the game, it makes it playing a little bit easier. You know, if we play a board game or we play chess and you practice every single day and you play someone who doesn't know is it fair? Is it a fair game if we play chess and someone's been studying chess for 5 years and then me come in there with no experience thinking I'm all big and bad at chess because I watched a tutorial for 2 days and I'm going to go after this master? He is going to wipe the table with me. So it's a game. I need to polish up my chess skills and learn and learn and learn. So the trading is a game as well. If you look at it like that, it's a game. So you got to learn how to play the game. It's much better learning how to play the game when you are not over leveraging, when you're not revenge trading, when you're not paying attention to what's going on because all you're looking at is your profit loss and how many accounts you've blown in the last week. Take some time out of your day. I know it's hard to do, but study what's actually going on. Like that's why I'm showing you guys. This is like a study time. What happened down here? So let's talk about it. So remember Ron said you can look at last night's call and I own up to it. I said I was bullish on the US dollar. Okay, I broke it down. But this big red candle made Ron look like an idiot last night because it came down red, but still comes down, and now I understand why they brought it down. So I'm even more bullish now when I see this because they broke the area of demand. Okay, they came down here, and that's it. They gobbled up all of this money. So this money is part of this now bullish candle. This money is part of this bullish candle. They've grabbed all the liquidity down there. So once they get it, now they can come up with some strong volume. And they had enough volume to break this daily point of interest, this yellow line. It came up there, and they also took out the high, took out that daily area, and came down and closed. Now our 2 p.m. candle closed. So 2 p.m. consisted of the half basis point cut. It consisted of 2:30 p.m. where Powell came to the podium with his purple tie, and then he talked about it. He gave his summary. He answered some questions, and then we move into power hour into the close of the day. Sorry, when Powell was speaking over here, this is when the U.S. dollar took a tumble during that 2 p.m. and the conference. Once everything was done, and then Powell left, and then we go into power hour. Look at how it just came right back up and made a new high, and now we're kind of pushing, kind of pulling back. But look how they gap it up. So there's a gap now in the market. Some charts will show a gap, some won't, but it's kind of gapped up to test these levels up here. Now what I would do is, see this green box, I would stretch it into tomorrow. Continue to stretch it into trading next week. Okay, if it comes back down here, let's go now to the 4 hour. I'm going to get off the hourly chart. So do you guys understand? The 2 p.m. move was initially bearish, but it responded with a nice bullish move. And look where the bullish candle was created in our green box. So to me, that was just a nasty rug pull, if you ask me. They pulled the rug. They came down there, executed all these pending orders. You know, maybe some people lost a lot of money, maybe some people made a lot of money on those moves. Okay, that's not the question. The question is continue to analyze what's going on and where this is moving, because you're probably going to be trading tomorrow. You're probably going to trade Friday. I can pretty much assume 99% of us are going to trade next week, and we're going to continue trading into next month. So continue to know what's going on in here. Go back to your 4H candle, and now let's look at how the 4H is building. Okay, so we know that there's some money down here. That's why below the demand zone, there's buyers pending. So even if it comes back down here, you know, we're still holding this daily demand. No red volume closed below here. So you know when I always ask you guys, did any red volume close below here in order to flip this green box red, and then we might be US dollar might break 100, that psychological level where it has not broken for years now. Okay, so we might move down, but no volume has closed below there. So what I see is that 4 hour, that FOMC drop and coming right back up. And look at the bullish answer. So we might look at this as, I look at this as two bottoms. I look at this entire move coming down here as one bottom. I see the neckline right there, and then I see kind of the second bottom. Sorry, I will change this to white so you can see it. Okay, do you guys see that? Context. Okay, I know I see a lot of consolidation in there, and all of this madness in here. I still consider that to be one bottom in there. Okay, so you see how it came down, kind of consolidated down in here, and continue to push up. But you see we're not breaking that daily point of interest up there. And then the sellers brought it all the way right back down. FOMC, okay, took out all of the liquidity down there and it came right back up. But you still see how this bullish 4-hour candle kind of opened exactly where FOMC closed, and then all we see is the wick, like the footprint, what's left behind. And now we got a big bullish candle that came up, broke a new high. Okay, in order to continue to move bullish, we got to make those higher highs and the higher lows. So we got that nice big bullish candle, and now we're going to see in the tomorrow, in a little bit in Tokyo and London, are we going to get some 4-hour volume start to penetrate, come up here and maybe start closing above here and start respecting this yellow line, and maybe we're going to start to move up here? That would show some strength in the US dollar. Or are we going to pull back down now, and test this green box? Remember, we got that green box from that hourly structure. So that's kind of maybe still going to test 50% of that bullish 4-hour candle. Maybe it does come down here and then we continue to bounce and it creates a new higher low in the market. If this area doesn't hold, maybe we'll come back down and hold that hourly level. But more importantly, maybe like a triple bottom back down into that green box. But maybe we don't even come down here. Maybe they gathered enough volume with FOMC that they can continue to drive this up. Okay. So I'm sorry for the chart being so nasty here. So if you ask me, after what happened with FOMC, I'm still bullish on DXY. I'm still bullish on the US dollar. Maybe penetrating up to this area, and maybe we'll see if it can get all the way back up to test these levels. But still, it's an uphill battle because it's battling all of this selling pressure to the left of us. So it was a good move during the FOMC, and if we can hold structure and build something here on the 4 hours, I can see us moving a little bit higher and cutting through this resistance above us. Okay, and then with the securities that you're trading, then kind of use it to help you with what you're trading. So number one, a lot of us were trading gold, XAU USD. So remember these pathways, these arrows from last night's call. So what did we see here? Okay, remember option one was to maybe just come up to this yellow line, that daily area, which it was trading there. It broke above there 5 a.m. but then came closed right there. Again, it came back up during Wall Street and came back down and closed right here until FOMC stepped in, and then we really had the big moves. But remember what we also talked about. Remember this arrow right here? Look at it right there. Okay, guys, I did not change these arrows. This is the same exact chart as last night, okay? And I'm just going to talk about these arrows now. BUB, welcome. Yoda in the house. Go to NASDAQ right now. Okay, yeah, that's more for New York. Right now we're talking about this gold and FOMC. I know you love your NASDAQ. It's all good. We'll get to it. Okay, guys. You guys now, remember what I was saying? Okay, this previous all-time high, 2590. What was that psychological area I was talking about last night? Why is the top of this arrow sitting at 2600? Okay, remember now, this is after the fact. We talked about this yesterday. If you want, go back and watch yesterday's video and you will see how we analyze this and how we came up with these targets. Okay, so remember what I said. Option one was to maybe not take out the supply, or what's up here. Okay, we described the how the DXY took out the bottom. So again, okay guys, NQ is crazy. Oh wow. Okay, so Yoda, enlighten us. What is happening here? These are 5-minute candles, by the way. This is 7:50, 7:55, and 8 p.m. is the futures market. Okay, so remember, again, we talked about this yesterday. We were bullish on S&P, NASDAQ. If there is some strength in the US dollar, remember what we talked about. We talked if there's strength in the US dollar, maybe they're going to start to put that money maybe into the markets. So look at even NASDAQ, okay, just on the hourly here. There is some levels of structure that are holding nicely, like this area. Again, we're going off topic now. We're doing a whole different security, all because of you, Blair, over here, okay, where I had some structure in tonight's call. But you see now, okay, we've been rejected. Look how many times we're getting rejected. Okay, so I can see some clear rejections. So we do have some big resistance. We had it right there. It's right in that big cluster, and it's still up here. So please, guys, if you're trading NASDAQ, make this zone a big red box, okay, on the hourly, on 1H. Sorry, guys, I will get back to what I had planned. But so what you're going to look for tonight and going into London and going into New York, can NASDAQ get some nice hourly volume closing above these wicks in here, so that if it does come back up green and close above here, you will have the ability to change this color of this box to green, and we'll see if it holds. If there's going to be some pullbacks, I can already see, like, look at this hourly candle that just opened and closed. If I cut it in half, let's do right now, let's go through this. Cut it in half. How would I go about doing this if I was trading by myself? That's what I would do. I would cut it in half right there. And then what I also do is I look to the left of the chart, how it reacted, so that's pretty good level. I look here how it was holding as support when the volume was above, and I also look how it held as resistance right here where it got pushed down. So this white line, 19,510. Let's now get even a little bit more specific. We have 19,500, 10 pips above and 10 pips below. If you want to draw a zone, go right now. I would use maybe go up to 520 and then come down to 510, 500 right there. So now I give myself a zone. Pretty simple. So in case it doesn't just hit the white line exactly, maybe it hits 520, 515, still consider it maybe to be bullish. If they got to dip down into here, maybe break 500, 510, come down to 500, maybe it will hold. Continue with this green box into the future, into tomorrow, into next week. Damon, thank you for joining. You just joined. I gotta tell you something. Damon, don't go anywhere, bro. I dedicated a whole webinar on Monday night for you, okay? Anyways, holy shit, guys! I told you I got to get out of here at 8:30 in 20 minutes. I got a lot going on here, but I didn't expect the call to go like this. So now I'm kind of helping you guys prepare your NASDAQ charts. Okay, if we continue to pull back red, maybe we'll hold on here and start to build. Think of this zone as maybe it might have to come back down and consolidate in here. So you see how I'm already drawing my boxes, and then I just kind of allow the volume to naturally come in here and play and see what it does. If we come back down, maybe come back down and trade in here, maybe respect this, and then we start driving back up here and we start to close above, maybe we can flip this green, and then all of a sudden tomorrow New York, NASDAQ is breaking out, all the way through up here. Okay, but we could also I don't want to always just assume that that's going to happen. What happens if we kind of lose this green box and sellers close it below here? Then unfortunately you got to flip that green box red, because then buyers will come back into it. And then if it's now turning into a large offer and lots of supply, then maybe we'll push back down and test this green box. We've tested it here. We've tested it here. It's holding. Maybe down there might be that opportunity to come back up. Okay, so we play it hour by hour depending on your time frame, and just understand that that was a big move, but no volume is following through. Remember, we talked about last couple of weeks, when you're on a free throw line, you want to follow through with your wrists. Still see the follow through on the candle. This candle is going to close in 47 minutes. Still a lot of time. It was just that initial 8 p.m. breakout, but still follow this thing. Guys, if you can read in the chat BUB with the wrench, this is Yoda. He is providing some knowledge in there. Zoom guys, you guys know all about him. This man knows everything there is to know about indices, especially NASDAQ. So thank you for your insights. Appreciate it. Okay, so we had a big move there on the 5 minutes. But again, if you're watching the 5 minutes, still no volume has closed above. It broke out, push back down. Now we're trading in here. It might need to come back down and then go back up. Okay, but this is where it could build inside this. This now is that hourly zone, and now you can watch the 5 minute reactions in here. Okay, so I got to get back to doing what I was doing here. We were on gold. Sorry guys for going off topic, but you guys told me NASDAQ was doing something, so we take a look at it. If you look at it, okay, again, NASDAQ. See how crazy it is at FOMC? This is why sometimes I was saying, just sit back, relax, and watch. Okay, so it came initially, what happened? It opened, it was red, red, red. Okay, so they took out some liquidity down there, came back up, green, 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 push all the way up there, and come back down and close. It came retraced all the way right back down to kind of where I can see 5 minute structure. If I draw like that red line, I like to draw where there's 5 minute structure. There's my 5 minute structural line. Okay, and you see how still FOMC still plays out, still holds there and bounces, continues to go up. We couldn't close, okay, above this wick. So now the sellers naturally come back in. We're moving into now power hour. Then they bring it all the way back down, comes back up in the after hours and things like that. It starts to build, didn't break below the green box, coming back up. So slowly now, if you're watching on the 5 minutes from down here, it's making a higher low bottom right here. Right there, higher low, continue new higher high, pulling back. This area is naturally a new higher high, a higher low in the market, and then you got this big bullish breakout right before the futures market opened up. So you can see now, like if you drew like kind of, you're looking at a trend line and things like that, is still in an uptrend. It's still trending up. Still I know it's not too accurate here. Like there, I'm just trying to show you that it was accurate. They broke it down, but it's still holding a higher low, and then that big bullish breakout. I'm still bullish on all the indices, S&P, NASDAQ, and US 30 going into tomorrow, as long as the US dollar is still holding good momentum and good strength. Okay, we talked about that. So watch this on the higher time frames. Let me just go back to gold, please. What we were doing. Okay, so remember gold, what we talked about. Okay, so remember last night's call. Okay, so I gave options, okay, some bias. I gave you my bias. I said the what ifs. What if they do this and what if they do that? You gotta assume some what ifs, and then if it plays out perfectly, then act upon it and have the conviction to trade it. Okay, so I said here that we could potentially just maybe break up to here and then go back down, which it did right there. It started to break up 7 a.m. I was off. I had 25.80. Now I look at it I was off 25.79 and 50 cents, and that hourly high was almost 25.81. Okay, I was off by 15 pips, but it came up and then went right back down. Okay, but are we getting that that volume still below these key levels. Yes, this could naturally keep selling down, okay? But the big clue was this. This is how, in fact, it opened up. FOMC 2 p.m. Remember I said the fake outs, what they could do, okay? What's up here? We just talked about on what is up here? Above all of this structure, remember this was previous all-time high. There's got to be something up there, okay? You know, above the all-time high. Is there not some type of liquidity up there? What are these red lines? We did this with the US dollar, but we did it opposite. Okay, so there's some pending orders there. Pending orders, guys. You know, pending orders, in other words, aka known as liquidity, known as there's some orders up there. There's some sellers that want to sell up there. There's some buyers that want to buy the all-time high because they're assuming gold is going to continue to drive even further. Okay, there's a ton of orders up here. There's red orders, there's green orders, and we don't know until we get some delta and understand what these transactions, after they transact, what they are. But remember what we said. Maybe it comes in to take out the all-time high. And look at the top of my arrow right here, 2600. Okay, the reason why I placed it there was that psychological area. $10 above the all-time high is a pretty good level. And look at what it came into, guys. I'm not making this up. This was today, 2,617 cents. Okay, if you want to say it like that, 2,600 on the dot. Okay, it doesn't get any more technical than that. I'm sorry to tell you guys that. This was with FOMC volume as well. Why did it just come all the way up there? For some reason, tap into 2600 and get rejected. Okay, that is where there's a huge order block waiting to get activated right in there. And there was a massive seller. There was a ton of supply waiting to fill all these orders at 2600. And look at the reaction. It was just boom. Look at the shakeout. Come all the way back down. And look at the follow through. Look at the follow through. That now at 3 p.m. didn't even allow, like, you know, when I say assume it might come back up green to retest this level or that level, it just opened red and continue to drop all the way down there. And then there was this little sympathy, little bounce rally right now that we're flagging right at this daily point of control at 2,558. Okay, so you guys, I'm still bearish on gold because gold closed below my key levels. If we can get more hourly volume closing below here, yes, it could continue to fall down to here. Okay, so and then if you want to break this down, I know some of you guys were watching the 5 minutes when all of this madness happened. Look at how it looks on the 5 minutes. Okay, so let's just take a peek at this. Okay, so you see how, look at how they trick us at 135, 140, 145, 150, 155. So this is, they're selling gold, you know, to get us to bite hook, line, and sinker. Maybe we're going to sell. And then look at what they do. 2 p.m., boom, a bullish ignited candle. Okay, driving right through here, continue to push, creating. So there was 5 minutes. Let's see how long this lasted. 5 minutes, 10 minutes, 15 minutes, 20 minutes, 25, 30 minutes, okay? Roughly around 30 minutes. What happened that first 30 minutes of 2 p.m.? That's the official fund rate, and then Powell speaking at 2:30. So gold, with the drop of that initial drop of the US dollar. That's why sometimes, guys, we told you last night, watch how things play out. Instead of just boom, getting right in there and trading, you know, sometimes you might look and see what they're doing and then get a better trade after the fact. So you see how it played out right up to 2600. They took out a new all-time high right up here. And then look at the response at 235. Okay, when Powell started to speak, look at the big drop. It just came. There's no more new higher high. There's tweezer top high wicks in there, and then you get a big bearish engulfing candle come all the way down, close. Again, it took out. Look at this zone. We had our pending orders. You know, I'm always looking at 50% of that big bearish candle. and I assume that it would come back up there. I'm always drawing like a zone or a box right there, and look at it. It just opened green a little bit and continued to push down. Take out the low, close below structure. Again, it came back up, green, 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 and push down. Green, push down. Green, push down. And then if you're looking at 50% from the opening price to the closing price of this candle, again, just locate where you think is half. Okay, it's not that hard. You know, some right there, that's about half of the volume. It came green into it, back down, green into it, back down, green into it, back down. Did any volume, green volume, close above there? No. So where are the buyers? If they cannot close it above here, they're not strong, they're weak. And then the sellers continue to drop it. Look at how they baited in the buyers, and boom, they dropped them. This was nice if you were in a buy and you pipped and dipped and you got some money, but if you were holding, continuing thinking it's going to go all-time high and more and more and more, and you got greedy and you filled up more buy orders, then they slammed you down. And look at, they even closed it with red volume at 305 below all this structure and continued to drop, pull back. So we're trading right at this daily point of control area. So what I want you guys to get from kind of today's call is liquidity grabs. Understanding now where could we move? Now I see that they took out the all-time high. This is back to 4 hour now. They took out the all-time high perfectly to a nice psychological number, 2600, what we talked about last night. So look at this arrow where I had it coming up, okay, taking the all-time high again, where it follow the what's behind here, okay, and follow my arrows. See how we assumed if it came back up right into here, look at the high of these wicks. So I was looking to trade into this wick, this wick, this wick, this wick, around this area, 2588, okay, in there. And then the small pullback, there was some pullbacks, but we didn't kind of get any volume to close above to cause it. This was FOMC's big move, driving right through there. Okay, coming up, like creating the head of this. That's a shoulder. There's our head, 2600, perfect, right in there. You can bring that box across into the future, and then kind of pushing back down. So I was looking for sell orders below 2576. Confirmation 2570 below here, and we're continuing to push down. So even if there's pullbacks, like if we see gold come back up, green, 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 this might be an opportunity. 25, mark this on your charts, guys, 2570, 2569, to look for continuation to continue to sell back down. Maybe we get red volume closing below this yellow line, and then we can follow the arrows all the way down into this green demand zone. And then that would be a nice sell-off on gold. But right now, if we look at the 4 hour structure, it's still creating lower lows. That was I know it's a higher high above here, but to me, I see liquidity grab and they slammed it down. So we could be continuing to push down on gold, but there could be some pullbacks coming back up. So if you're looking to scalp some buys back up there, you can, absolutely. But just understand that these areas now are considered to be supply areas now, and gold could continue to push down if we see some strength on the US dollar this week, and continuing to go from there. What else did we look at? Okay, so maybe some securities haven't played out yet. We were looking at GBP USD also last night. How has this thing played out? Let's take a look. So GBP USD, still look at how the 4 hour candle. Now I'm still gonna get triggered here to look for maybe a possible. So what I could do is I could look for now, after seeing what happened in the market, I could be looking for a potential sell on GBP USD below this 138.85. If you guys want to mark this area on the chart. Because now what I see is they took it up, they took out the highs, okay, grabbed the liquidity up there, and now it came back down and we got a red bar closing. So if we can continue to get some red volume to close below here and retest this, then we're going to start to maybe drop down to here, and then we got that nice, we could start to get that nice sell into there. So if you're watching GBP USD, continue to monitor this area 131.85 and look for red volume, either 4 hour, 2 hour, or 1 hour, whatever time frame you trade, to physically close below and maybe look for a retest and a continuation sell. Because now we can see that they have been rejected, liquidity grab, pending orders, and now we might be coming down. So if you ignore the wicks right now, and I know there's a shit ton of arrows here, but I want to show this path where it came up right up there, came back down, that's our neckline. But look at where the volume is. The volume is right here, here, and kind of here. So this is kind of like a double top, it looks like, and we're falling down red. So all we got to do is kind of get some red volume close in here, maybe a pull, and then they drop it and break this critical area, and we get that nice drop. So I'm still bearish on GBP USD. Nothing has been activated yet. Still waiting at this area, okay? And maybe we can get some follow through on GBP USD. Again, if the US dollar is showing some strength, maybe the pound might start to sell a little bit as demand increases for the US dollar. We might see some selling in the pound, could see some selling in the euro. So then maybe sellers are selling the pound, selling the euro because they're in profit by making some good money on this in the last little bit. Now they want to take some profit off the table. They want to get out of the market, and maybe they want to bring that liquidity into the US dollar that is showing some strength now with the 50 basis point rate interest rate cut. Maybe might see. So you see how sometimes liquidity can just move around, and sell a little, sell here, maybe buy there, maybe a buy here, sell there, and it just continues to flow like a stream of water through different securities. Okay, so that's my perspective, my bias on GBP USD. And then we kind of touched up on S&P 500 yesterday. Has anything kind of played out? We were just talking about this to watch these levels. So I was bullish, okay, but still, let's see if we can get some good volume. So we had it break out for our new all-time high up there, 5,691. They pushed it back down. We're coming back up. So if we can start to see this arrow we had from last night coming up, it did, but then maybe pulling back and holding this area. If we get some 4 hour volume, we have an hour and a half to go for this body to close. If it starts to close above here, then see the big red box that used to be supply, supply, supply in the past. Maybe if this closes above, we change the color to green, because this might be where it accumulates, point of control, and then we continue to push for some new highs on S&P, maybe NASDAQ, maybe US 30, but it's still building. Nothing really broke down. Okay, FOMC, yes, it did drop it all the way down here, but if you look at the low of it, all the way down here, the low 5,613 kind of tweezer bottom low with kind of this wick right here, still holding here. So essentially it is still a higher low, and still they are pushing the market up, but we need some follow through. We didn't have follow through right here. We didn't have follow through. That was FOMC, but now we got a little bit, but can we get some volume closing above here? if it doesn't close, it might retrace right back down. But then you see where 50% is right there. Open, let's say if the volume kind of closes here, 50% is still in the top of the green box. So assume it's going to come down red, 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 and still there will be pending buyers trying to bring it right back up. So I'm still bullish on S&P, okay, and overall US indices as well. Okay, guys, it is 8:30. Damon, I just want to I was talking before you entered the call. Last night you were talking about discipline in trading and things like that, and you asked a very good question, and we were talking about it. So what I did was I came up with a little webinar here. We're gonna do this Monday night. So Damon, please join us Monday night at 7 p.m. And this will be technical discipline in trading. This is the super systems theory of trading that we're creating here. So what we're going to talk about is technical discipline in trading following a trading plan, why it's important, why we always talk about this, risk management. You guys understand the importance of this. Hopefully you guys are understanding this now, taking it a little bit more serious, and you're not kind of gambling in these markets. How emotional control, this is very difficult. How do you control your emotions when you're in drawdown, when you're making good money and you get greedy? How do you control these emotions? We'll talk about that. Consistency. Once you start to build some consistency, even if it's small little trades, you're still building your confidence. You can get more consistent. We have a trader in our group. I think he's now 17, 18, 19 days straight consistent making profits. He's done his weekly goal today and he's done for the week. Like, it's dramatic to see. It's night and day from where he was a month ago and where he is now. Just by tweaking his management, he was trading a little bit too large for his account, scaling it down to a more respectable level, allowing trades to breathe and play out and trust your analysis, and then it's getting him more profitable, building his confidence. When he's ready, he can scale that account, like he can deposit more money or apply for but now he's got the backup, he's got now the confidence, he's got the experience, now he's learning. So then now it's just a natural pivot into a larger account, again with the same percentage, but yes, obviously at the end of the day you can make more money with a bigger, having more. You're still doing the same exact thing, but I don't know, also maybe his setups, he's really honed in on getting more disciplined instead of focusing on the lower time frames. But again, I can talk about this. And just like when you go in a supermarket, if you go in the cereal aisle, there's a million cereal in there. There's Fruit Loops, Captain Crunch, Lucky Charms, Count Chocula. There's Fruity Pebbles. If I see Fruity Pebbles, it's game on, okay? Not too many supermarkets here in Canada sell Fruity Pebbles, and when I find it, I order a pallet of that. Like, I'm driving in there with a forklift. I'm getting all the Fruity Pebbles out of there. So market selection. I have the freedom to choose what cereal I want to buy. The markets are the same way. I have the freedom to choose. Today, do I want to trade gold? Maybe I want to focus on NASDAQ today. Maybe I got to go back to Miss Jones and see what Dow is doing. Or am I going to trade some Forex today? But you have the freedom to choose what you want. So market selection. Make sure you guys are choosing something that you guys are passionate about learning about, not just what your buddy is trading or just what everyone else is trading. Find what's specific to you. Like I love US 30. I know a lot of people dog me and it's an old man security. It's not weighted like how S&P and that. I don't give a shit about that. I've been trading Dow Jones for, I can't even tell you how long it's been, and I feel comfortable trading it. I know how it moves. I know, like, I've studied it, so I might trade it privately, and I'm happy with that. But if it's not your security of choice, find out what's best for you. Risk management. You see this word? We keep repeating this. We have to touch up on this, and we got to break it down what we really mean. Not just saying the word risk management. What are we actually talking about? What are we got to do with stop losses and pending orders and trailing stops and taking partials out of your trade and all of these things? So we can break this down. This can be a whole webinar in itself just on risk management. Trading routine. You got to have a routine every single day, okay? You have to. Remember what I was saying? Maybe add DXY in your trading routine as your analysis before you start your session. Add it in there. Maybe you don't do it, but maybe you should now. Maybe start to add that in your daily routine. Performance review. This is reviewing your trades at the end of the day, at the end of the week, going back testing, doing some review and things like that. So you have to do some performance review. You got to. Otherwise, you don't know what you're doing in the markets. You're just guessing every single day. At least get some analysis. If you did really good in today's FOMC, go back and study what you did. Did you wait for maybe for everything to settle down? Were you already prepared with what was going to happen, and you traded upon that, and you had good conviction, and you followed your rules, and you made some money? Go back right now and learn. Which time was it? What candle did you take? Was there a pullback on the candle? Did it come into 50% of the point of control? all of these things, and then start to see, oh, it did this, it did that, it did that. And then maybe the next day you're going to see the same setup and it's going to play out perfectly. And then now you're getting more experience with that. You're getting more confident with taking that trade, and also just expecting that trade to happen. Your bias is correct. Trading psychology, this is a big one. We're going to touch up on that. And then adaptability. Okay, so this will be Monday night's webinar. Okay, it's not going to be like a session where we're trading. It's going to be this PowerPoint presentation. We're going to talk together as a group on YouTube and Zoom, 7 p.m. Eastern. Please join us. This was because of Damon, who's in the YouTube. He asked a question, and it was a great question. We touched up on this, and I said we could create a webinar and we could talk all about this. So please, guys, join us on Monday at 7 p.m. for this webinar. But also, don't forget to join us tomorrow night at 7 p.m. because we'll be talking about the markets, see how our swing trade higher time frame setups are playing out, and overall just see what is going on in these crazy markets. Okay, so guys, that's it for me. I gotta get out of here. I'm gonna go to the gym right now. I got to follow my routine now. I got to get back into a routine. I got to get back into the gym and get back in shape here. So everyone, thanks everyone for joining. I appreciate you. Yoda, thank you for joining, Blair. I appreciate you guys. Make sure you guys look at his comments in the chat over here. He loves NASDAQ. And thank you guys. Noor, congratulations on everything. I see what you're doing as well, Noor. It's amazing. So just keep it up. Stay focused, Noor. Just risk management, and everything will work out. It takes time, guys. It's not easy. Ask anyone in this group. No one here is one-hit wonders. Everyone in here has struggled and put in the work and put in the time, and those late nights, and you're scratching your head and saying, what the hell is going on? Am I ever going to figure out these markets? You're doubting yourself, you're questioning yourself. Believe me, we've all been through it. We've considered quitting at some points. You've maybe considered to quit and never trade again. But it just scale back, tone it down, maybe go back to a demo. I know it's your ego is on the line if we're using a demo, but sometimes just going back to a demo, back to the basics, you're not really studying your profit loss. When you're on a demo account, you're not really in real life, you're not down $5,000, because if you're down $5,000 in real life, it's going to affect your next trade. You're maybe scared to take a trade, and it's the analysis perfect, but you're just scared to hit that button when everything is perfect, because you're scared because you've lost $5,000 and you might lose more, but it's a perfect setup. So also, with a demo account, maybe you eliminate those emotions and you're actually watching the price action and learning from it. Then when you get the confidence, then trade with your live account again. Get back in the markets. But while you're struggling, stop making the matters worse. Stop compounding and losing more and losing more and losing more and losing more. Because then you're going to get stressed out. You're going to have some, you're going to not even think about trading. You're going to be thinking about other things. How am I going to recover this money? What am I going to do? And all of these things that have nothing to do with trading. Now these emotions are taking over, and I can pretty much guarantee it's going to destroy you as a trader. Okay, everybody that's here on this call probably knows where I'm coming from. It will mentally, emotionally, financially destroy you. It will destroy you in your everyday life. It will destroy you with your family time. It will just destroy you. We've all been there and we've all done it. Okay, I'll be the first one to raise my hand and tell me. I tell you guys, I've been there. I've been through it. I don't want you guys to go through that shit. Okay, that's why now a lot of snipers are actually seeing some success. They're seeing some consistency. They're stringing together a first profitable week. That's huge. Some traders are gotten 2 weeks, 3 weeks, 1 month now of good profits. I'm not saying 100% perfect, but 70, 80% where they've never seen this before. Yeah, they have some shitty days, but they're learning to now control their losses. Their losses are smaller, and their winning days are a little larger. So they're now seeing the compounding mathematics. They're starting to see, wow, I'm up this much in a month. Let's now take this into month 2. Remember, trading is long term. Don't just think for today. Don't just think for tomorrow. Think where you're going to be in 3 months, 6 months, 1 year, 2 years, 3 years, 5 years, and then you will really understand this. But I'm going to need you guys to work with me. You guys cannot be gambling in these markets. You got to take it serious. The more serious you take it, then I can then get more into more advanced concepts and really break down the markets for you guys, that you guys will understand it on kind of like my level. So that's where I want to get you guys at. And if you're a beginner, it's all good. Join us. Don't worry. We teach it as if you were all beginners. Okay, I don't consider anyone advanced here. I'm not even advanced. I consider myself still a beginner, and I'm still learning just like you guys. But always be a student to the game and continue learning from FOMC's move. Why did they take out that liquidity? Like right now, like after the call, go and study that, see how it affected your trades and things like that, and understand more the behind the scenes, what's going on, why they did that. Okay, they did it for a reason. The market didn't just go there just because. It went there for a specific reason, and it was all orchestrated for a specific reason. Okay, it's not, it just went there for because it got lucky. It went there for a specific reason, took out the liquidity for a specific reason, and how will this impact the markets trading tomorrow, next day, next week? Okay. But anyways, guys, I got to get out of here. Thank you everyone on Zoom. I appreciate all of you guys. Join if you guys can, Shahab in London and Dave tomorrow, and then I'll see you guys tomorrow for these educational sessions, late night Tokyo. Appreciate everyone on YouTube. If you guys can hit the like button when you step out, subscribe to the channel if you're new here. We love new subscribers, and continue learning with us here at SST. Thank you guys. I appreciate all of you guys on YouTube. Have a good night. God bless everyone. I hope you guys did good and learned a little bit from today's FOMC. It won't be the first and it won't be the last FOMC session. There's another one coming up in November, so we got to prepare ourselves for it, okay? And elections, holy shit, it's getting crazy in the US. It's going to even get bonkers coming up. So be careful in these markets, guys. Have fun, and we'll see you guys tomorrow. Thank you, guys. Thanks, everyone. Have a good night. Val, take care. Phil, have a good night. Amir, thank you, bro. Noor, take care. Zanetta, good night. Good night, guys. Have a good night, guys. Good night, Tony. Damon, you're the legend. Thank you, bro, for the question. I appreciate you. Keep them coming. Sergeant KLR, thank you for joining, Kenny. Appreciate you, bro. Tony Gold, take care. Take care, guys. Arabs Trading Academy, what's going on? Thank you for joining, Habibi. Thank you. Thank you. We'll see you guys tomorrow. See you guys. Ciao.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.